The stock market is really on a record tear, I think it's fair to say. You've always drawn the distinction between price and value.
Right.
Are we seeing a run-up in value or in price?
Well, value gains from year to year. I mean, as companies retain earnings, stocks basically, if you own a business and you plow back a good portion of your earnings into building the business, you're going to have something more valuable on average year after year. Now, sometimes the market reflects it, and sometimes it's crashing for some other reason or whatever. But the stock market builds in value, underlying value from year to year. And it's grown a lot. I bought my first stock when the Dow was just under 100 when I was 11 years old, and look where it is now.
Well, look at where it is right now, because one of the things you take a look at to measure it is the total value of the stock market compared to GDP.
Right.
And if you look at that graph, it's at the high point. It's the highest it's been since the tech crash back in the late 90s, as a practical matter. Does that mean we're overextended? Is this a better time to be fearful rather than greedy?
I'm buying stocks, but I'm not buying them because I think they're going to go up next year. I'm buying them because I think they'll be worth quite a bit more money 10 years or 20 years from now. And I don't know whether they're going to go up or down tomorrow or next week or next month or next year. I do know they're good businesses. And in relation, you have to measure investments in relation to each other, and your alternative for most people is fixed income. And you get 3.02% or something like that for 30 years. So would you rather invest in a company that's earning 15 or 20% on their invested capital and compounding, or would you rather have a 3% bond which can never earn more than 3% while you own it?
At the same time, there are some stocks that are bargains, good bargains from your point of view. When the market's up this high, that means values have gone up quite a bit.
Yeah.
And you're sitting on a lot of cash, $110 billion. As a practical matter, don't we have to have more fear in the marketplace before you're really deploying a lot of that cash?
Well, I love it when there's, I don't love it for the country as a whole, but I mean that creates prices that make me want to shovel out the money as fast as I can. But we've been shoveling out money anyway, and it's not as attractive as obviously when I was buying in 2008 and 2009, and that wasn't as attractive. 1974 was the best year for buying securities in my lifetime. That'll happen from time to time, but you can't sit around and wait for it. You're never going to catch the bottom anyway, and everybody will be terrified at that time. We keep buying as long as we find something that's attractive to us, an attractive business at a reasonable price. And I love it if it's a really juicy price, but I still keep buying.